Everyone in crypto is trying hard to grow their portfolio, but I hate to break it to you. Most of us are probably losing money when we trade. Retail participants like you and me are really quite crap at trading. 80 to 90% of us are losing money doing it, at least according to decades of research studying us. Are you in the 10 to 20%? Honestly? Consistently? If you are, that's awesome. But also know how uncommon it is and how hard it is to do repeatedly. And even then, you still need to convert your wins into a profit-keeping system. Most people don't. They just keep rotating until the portfolio is diminished again. So if we're pretty crappy at trading markets, why are we all being pushed into more trades? Here on Crypto YouTube, faster rotations, and now trading bots too. Well, it's no accident. YouTube's recommendation algorithm rewards the emotions you're feeling with the market. Hype in a bull, doom in a bear. That's what drives views. And crypto exchanges want you trading as much as possible because every trade means more fees for them and more liquidations from you, often enough. Put those together and the whole system is pushing us into this trading trap. And it's a trap because nobody's teaching us the skills to get out of it. Hi, welcome to Sovereign Stash. I'm Anna. I invest in crypto full time and I'm sharing my journey and the strategies I'm learning as I grow my Sovereign Stash. This channel is really all about building the skills to grow and keep our wealth in crypto. If you're on board with that mission, like and subscribe so you don't miss my updates. As a quick reminder, everything on this channel is financial entertainment, not financial advice. My goal is to share my frameworks and what I'm learning. But you're the CEO of your own portfolio and you're responsible for all the decisions you make. So please do your own extensive research and especially learn about risk management. Now let's get going. In this video, I'm going to break down why most people get stuck in the trading trap, the two real paths to wealth in crypto, and the skills that actually tilt the odds back in your favor. And I'll share one particular skill I'm personally working on right now, because I believe market cycles are shifting and I want to be prepared if it plays out that way. Right, now here's the thing. The way I see it, there's really just two main paths to wealth in crypto. Path one, slow investing into assets with proven staying power. This is the long-term investing based approach. For example, dollar cost averaging into a leading asset. Historically, investors who took this path with Bitcoin have seen significant returns, which demonstrates the power of this long-term strategy. What qualifies as an asset with proven staying power is certainly a topic of endless debate. For some, it's only Bitcoin, and that's fine. But for others, it might be an index or a basket of the top 5 or the top 10, or your own customized basket of the largest networks. The key isn't necessarily the specific asset or index, but the principle of allocating into what you personally consider a lower risk, long-term foundation, and then investing into it consistently over time. The point is assets with real staying power, not rotating into the latest small cap meme coin. Okay, and path two. This is faster trading and rotations. So it's a more short-term trading based approach. For example, rotating through altcoins as narratives change, setting up short-term trade entries and exits based on charts or indicators. Pair trading, so trying to catch when one token outperforms another. Using leverage or perpetual futures to amplify positions. Scalping and day trading small price moves. Chasing meme coins and microcaps early, hoping to flip them. Or running grid bots, DCA bots, and copy trading bots to automate those strategies. The common theme for path two is speed and turnover. It can look exciting, but it comes with much higher risk. Of course, you can't escape trading completely, even for path one, because every investor is technically a trader the moment they buy or sell. Now, you can run a hybrid of these paths. I do. Personally, I'm about 90% path one, stacking proven assets, and 10% path two, where I take some higher risk bets. I share what I do here for transparency, but it's not a prescriptive template for you. That 90-10 ratio is calibrated specifically to my personal long-term goals, my skill set, and my personal tolerance for risk. The key takeaway isn't my specific numbers, because the point isn't that one path is right or wrong. The point is this: know which path you're actually on and Have you ensured you have the right skills for it? Okay, reality check time. Let's start with path 2, the fast one. Trading can be exciting and fun. Rotating alts feels smart. Copybots promise to remove emotions, but in reality, most people are still losing money on this path. Even the winning 10 to 20% may still underperform the disciplined long-term investors because their net returns shrink once you add in taxes, fees, plus any missed timing of the market. Historically, investors who simply stacked Bitcoin through past cycles, slow, boring path 1, still outperformed the majority of active altcoin traders. Here's an exercise for you. If you've been trading, get very specific with the maths and go back and track your results. And don't forget to include taxes and trading fees. Don't just count wins. Then ask yourself, am I actually growing my wealth or just spinning my wheels? This is a judgment-free zone, by the way. I've done this exercise in the past and it was sobering. But the biggest mistake in path 2 isn't just bad trades. It's failing to convert wins into assets with real staying power. Here's how it usually goes. Someone makes a great altcoin trade, then rolls the profit into another risky alt, then another, until eventually the whole stack is gone. The difference between someone who survives and someone who gets wrecked is often conversion discipline. Some people call it profit taking. I like to think of it as a profit keeping system. This means having a system with predefined rules. A common strategy is to skim a portion of wins into a core reserve. For example, into an asset like Bitcoin or whatever you consider your long-term base. Because if you don't, path 2 almost always ends in wreckage for most of us. I break down rules I personally use to protect my profits in this video. I'll link it below if you haven't seen it. Now let's talk about bots. Right now, a lot of crypto YouTubers are partnering with exchanges, pitching copybots as a solution for our emotional trading. And to be fair, bots can help with consistency. I'm not anti-bot, but bots are shallow at the moment. They don't solve position sizing. They don't enforce conversion discipline like we just talked about. And they don't protect you from bad asset choices. So if you're considering trading bots, here's a filter. Does this bot help me execute my strategy? Or does it just push me to trade more? In the future, DeFi, decentralized finance AI tools and autonomous agents could be game changers for us. Let's quickly talk about what's on the horizon with AI agents. Today, most bots are still execution driven. They don't actually think, for example, about the macro context, the effects of regulation on crypto, or network adoption curves. And they can amplify trader error if misused. In the medium term, AI agents will get better at data-driven decisions. They'll scan narratives, backtest thousands of strategies, and monitor liquidity across chains in real time. They'll probably outperform most humans at quantitative investing, or all humans. And in the long term, AI might even propose optimal portfolios for us and execute them. But here's the thing, even if agents are smarter, you're still the principal. So you decide what time horizon matters. So retirement in 15 years versus cash flow next year, for example. You decide what risks you're willing to take. Bitcoin maxi holding versus rotating into ETH versus higher risk altcoin exposure. You decide what sovereignty means. So do you let an AI agent park your wealth in a BlackRock product? Or do you insist on self-custody? I'm really excited about the sophisticated DeFi I know must be coming. It's going to be incredible. But that's not what most bots are today. So what can you do today to change the odds in your favor as a retail trader? Well, here's what the data says works. We can focus on 5 key levers to improve our portfolio performance. Now, these aren't the full skill set you need as a crypto investor. I'll cover more in future videos, but research from markets all over the world shows these 5 repeatedly. Now I'm going to go through these pretty fast today, but a lot of my earlier videos cover these in more depth. And my free 5-day email course is another way you can learn about these. It's a starter's guide that goes through foundational skills in a very practical way. You can sign up through a link in the description. Number 1, sizing skill. So portfolio allocation sizing. Don't bet the farm on one altcoin. Crypto survivors know how to size a risk. Second, conversion discipline. Skim your profits into your core durable assets or you'll give them back. Number 3, exit skill. Whether you use technicals such as price, thesis-based milestones or time-based rules. Have a way out before you go in. Number 4, time horizon skill. Wealth builds through cycles, and most people underestimate how long it takes. And thinking long-term is a seriously underestimated skill. It's like the marshmallow test. If you know, you know. But if cycles change, your plan has to adapt. And finally, strategy matching. This one's big. Don't copy someone else's playbook blindly. You've got to match your approach to your personal goals and your personal risk appetite. No one else's will work. And most importantly, your skills. Now, you don't need to master all 5 levers today, but even picking one to improve this cycle could change your long-term results. So have a think about which of these 5 is your weakest link right now. Pause the video for a second and have a think. And then let me know in the comments which skill you're focusing on this cycle. So for me, in the last phase of the market, I focused hard on position allocation sizing. And boy, did it save me more than once. So I really know its power now. This time, I'm working on number 4, time horizon. My thesis is that the old 4-year cycles are breaking down as the structure of the market changes with much more traditional finance capital flowing into crypto, especially through stablecoins coming. Now, if that's true, I'll need strategies that work for me if we don't get those deep bear markets or crypto winters anymore. Because historically, that's when the best market opportunities appeared. The counter argument, of course, is that the market's deeply ingrained psychology and speculative habits will still overpower the influence of this new, more passive institutional money. But either way, I'll need a strategy that works for me if the cycles are changing. So what are our key takeaways? There are 2 paths to riches, if you like. Simplified, of course. Path 1, slow stacking into proven assets. Path 2, faster, riskier trading rotations. Both paths can work. I run a hybrid myself, but Path 2 requires strong technical trading skills and systems to be successful. But even Path 1 requires asset selection skills, some trading skills and discipline. Whichever path you're on, it'll only work well if you're continually improving your skills and knowledge in crypto, because these markets and assets are ever changing, especially in their relativity to each other. And those 5 levers I've just shared are how you can tilt the odds back in your favor as a retail trader. In an upcoming video, I'll outline an even deeper dive, the investor skills that really move the needle on a portfolio. So like and subscribe if that interests you, if you haven't already, so you don't miss it when it drops. Now, if you want to go deeper right now, I've got 2 videos you should check out. One on how I actually take profits on my altcoins, and one on how I protect my profits so I don't give them back to the market. They're both right here. Pick whichever one you need most. And a final note, if you've emailed me recently, thank you so much. My inbox is overwhelmed. I'll do my best, but I can't promise fast replies to everyone like I once could. My number 1 job is making a video for you every week, and believe it or not, that takes a lot of my time. I don't have a team for this channel, so it's just me. But I'm working on systems so I can focus on what's most helpful for you, and I'm taking all of your questions and feedback on board to make future videos even more relevant, and to update the email course in the future. So thanks again for being here. Your support is very appreciated. Let's keep building our investing skills, our wealth, and our freedom together. Thanks for watching. I'll see you in the next one.